I think Bitcoin was it was a $90 billion asset class in March of 2000 when I was first looking at it. And then by August, it was about $180 billion asset class. And right now, 4 years later, it's $1.8 trillion asset class. And I think it's going to 18 trillion, then 180 trillion, then it's going to go beyond that. So I think it's a very simple thing. I think Bitcoin is going to grow from 0.1% of the money in the world to 7% of the money in the world over the next 21 years. And of course, you should just go long and keep buying it.
As Bitcoin positions itself to capture 7% of global wealth, the strategy for success is clear: buy and hold. That's the latest insight from MicroStrategy Executive Chairman Michael Saylor. Recently, Saylor and MicroStrategy have made significant strides in Bitcoin, with the firm not only continuing to expand its Bitcoin holdings but also completing a $3 billion offering of 0% convertible senior notes due in December 2029. According to Saylor, much of the raised funds will be allocated to purchasing more Bitcoin. Initially, MicroStrategy aimed to raise $11.75 billion but quickly increased that target to $2.6 billion due to overwhelming demand. The deal was finalized at $3 billion, with a 0% coupon and a 55% premium, setting an implied strike price of $672, which determines the price at which holders can buy or sell MicroStrategy's Class A stock. While many skeptics have questioned the risks of such a bold strategy, the results so far suggest it's paying off. Stay tuned until the end of the video, as Michael Saylor confidently shares why we should all consider following a similar Bitcoin strategy without fear.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
On October 30th, we announced our 21-21 plan. So $21 billion worth of equity we're going to raise and $21 billion we're going to raise in fixed income securities. And we filed this shelf registration to sell the $21 billion in equity in at-the-market offerings. So then the next week, we had the election, a lot of activity, the red sweep, and then that Monday, a week ago from today, we announced we'd actually bought $2 billion of Bitcoin. So that was like a $2 billion week, and it's like 27,000 Bitcoin or something. But then another week went by. So the announcement this morning was from last week's activity. So that's 5 days in the marketplace. So we did about $2 billion the first week, and we did $4.6 billion the second week.
This is the biggest ever, biggest purchase you've
Yeah,
ever
I
made.
think it's the biggest Bitcoin purchase ever. Yeah, so $6.6 billion since we had our quarterly results. So, I think it's like 41, 42 times we bought Bitcoin. In that range. So ever since August of 2020, we keep buying, we don't sell. It's a very simple strategy. Bitcoin is Manhattan in cyberspace. I just want to keep buying Manhattan in cyberspace. I have this theory that one day 8 billion people want to put their money in Manhattan in cyberspace. And of course, the more we bought, the more transparent we are, the more the capital markets get behind us. So now, if you're an investor on Wall Street and you're looking for the company that's going to buy up cyberspace, then you're buying MicroStrategy stock. And some people like Bitcoin, so they buy Bitcoin. Every day of my life, I tell people to buy Bitcoin. Some people want more Bitcoin, right? The joke I have is the only thing better than Bitcoin is more Bitcoin. So we borrowed $4.2 billion at 82 basis points, and we bought Bitcoin with it. So for the people that like Bitcoin, they buy it, but people that really like it want to borrow a lot of money and buy more. And then there's another group of investors, the convertible bond investors. And how do you buy Bitcoin at the all-time high and get the upside but don't have the downside? So you buy the bonds, and it turns out that our bonds have outperformed Bitcoin, but they're bonds. And so that blows people's minds that we can actually sell you a bond. They don't just outperform all the other bonds. Some of these bonds they're trading 200 plus against 100 basis. So they're up 100%. So they outperform all the bonds, but they also outperform the Bitcoin. And that's because we've created a public company with a tiered capital structure, and we've got a lot of permanent capital. Then we've got the senior bonds and the capital structure, and then The equity, generates a BTC yield. And so a lot of Bitcoin maxis pile into the equity, and that gives us a premium. And we're able to use the premium from the equity in order to create very accretive capital markets transactions with the bonds and the rest of the equity. And so the way it works is we're selling convertible bonds. And the convertible bonds have a bond component, and then they have an option component, like a call option. And so the convertible arbitrageurs and the options traders, they like the volatility in the stock. One thing you might not know is we have the most volatile stock in the S&P 500. So if you took all 500 stocks in the S&P 500, you said, which is the most volatile? Like, we're like 100 vol. The S&P, the VIX is like 15. Most of the Mag 7 stocks, they would be like 20, 25 vol. Bitcoin is 50, so it's like 3 to 4 times the volatility of the S&P index. MicroStrategy, we lever the Bitcoin, so we get 2x that, so we get to 100. And conventional investors are afraid of volatility. They fear it. They're like, I can't handle the volatility. But volatility is like RPM in an engine. It's like spinning at 100 RPM instead of 10 RPM. So if you plug volatility in the Black-Scholes equation, the options are a lot more valuable if you have volatility.
Despite facing criticism, Saylor remains unwavering in his strategy. He is confident that MicroStrategy's size, stability, and ability to manage risk make its convertible bonds a secure investment. According to Saylor, the company's financial strength is a powerful asset that will lead to something truly extraordinary. He also highlights that investing in MicroStrategy stock provides an opportunity for those unable to invest directly in Bitcoin, often due to government restrictions, to gain exposure to it. MicroStrategy offers one of the lowest costs for raising capital, allowing investors to access Bitcoin through a well-established company with over 386,000 Bitcoin, valued at nearly $37 billion, the most held by any public company. MicroStrategy plans to continue its Bitcoin acquisitions, driven by Saylor's strong belief in the cryptocurrency's promising future. Stay tuned as Michael Saylor delves deeper into his strategy.
I think Bitcoin was it was a $90 billion asset class in March of 2000 when I was first looking at it. And then by August, it was about a $180 billion asset class. And right now, 4 years later, it's $1.8 trillion asset class. And I think it's going to 18 trillion, then 180 trillion, then it's going to go beyond that. So I think it's a very simple thing. I think Bitcoin is going to grow from 0.1% of the money in the world to 7% of the money in the world over the next 21 years. And of course, you should just go long and keep buying it.
0.1% to, you said 7%?
Yeah, it'll go from like 1.8 trillion to $240 trillion, and it'll go up 29% a year, ARR. That is my base case.
And I've heard you say that in 21 years, it's going to be at $13 million
That takes you to 13 million a coin.
13 million a coin.
13 million a coin.
At 29%.
Every Bitcoin you don't buy is going to cost you $13 million, my friend. What I'm saying is that the 29% ARR is the risk-free cost of capital in the crypto economy. And the way you get to that number is Bitcoin's been going up about 55 or 60% a year for the past 4 years. It's been going up a little bit faster before that. But right now, Bitcoin's appreciating 60% a year. The S&P index, which is the conventional cost of capital, is more like 14, 15% a year. So you've got like a 4x difference. The mainstream economy is plus 15 points. Bitcoin is 60. They're going to converge. As Bitcoin gets to the size of the S&P, when it's 100 trillion or 200 trillion and it's close to the S&P, it's going to be 1.5x the performance of the S&P and 1.5x the vol. The VIX, which is the S&P volatility, is about 15. The ARR is about 15. Bitcoin's like 60. I mean, you can figure it out from the law of large numbers. When Bitcoin's a $100 trillion asset class, it's not going to be as volatile. And of course, at some point, companies in the S&P are all going to hold Bitcoin. And so like if MicroStrategy gets in the S&P and Tesla owns Bitcoin and other companies, if Microsoft starts buying Bitcoin, pretty soon the performance of Bitcoin is going to goose up, is going to improve the performance of the S&P, and then Bitcoin's going to converge. Bitcoin's always going to be more volatile because it's 24/7, 365. And it's always going to be higher performance because it doesn't have the risk factors of property or companies and the like. That's a very useful chart. You can pretty much understand the world if you focus on that, which is if you capitalize on bonds, you're minus 5%. That's why all the banks are struggling, and that's why operating companies can't accumulate capital. Because what that's telling you is that if you're using bonds as capital, it's toxic. It's sucking 5% of your life out of you. And look at the cost of capital, 15%. So here, if you use bonds, you're minus 20% versus the S&P. That means that it's an awful, way to build shareholder value. If I asked you, do you want to hold $100 billion of cash in bonds and you're Apple or Microsoft, the answer is no, because it's minus 20%. You might as well just give it back to the shareholders. They put it in the S&P index. But now look at the other side, right? Bitcoin is 4x that. So if I said you could put $100 billion into bonds or $100 billion into the S&P or $100 billion into Bitcoin, which of the three charts do you want? It's pretty obvious. You take the 60%. So what MicroStrategy did is we capitalized on Bitcoin, which is 60%, and then we levered it up with cheap convertible debt and equity raises, and we got to 120%. And that's how we ran 30x. That's why we outperformed NVIDIA. We're 2 or 3x NVIDIA over this time period, because we're actually capitalized. Now, coming back to the idea of growth, look, the big idea here is there's $450 trillion of money invested in bonds, invested in real estate, invested in equity, by wealthy individuals, families, and institutions, and it's just for a long-term store of value. People that are wealthy just want to stay wealthy. People just want to keep their money. So they're buying these store of value assets from the 20th century, and those store of value assets, they kind of bleed 3% energy because of famine and hurricane and war and inflation and competition and obsolescence and accident and torts and unions, and fill in the blank with all the things that cause your investment not to work. That's 3% of 450 trillion. That's like 10 to 15 trillion dollars of entropy, of chaos every year. So the big idea is Bitcoin is just here. The money is just running from the 20th century to the 21st century. It's moving from physical space to cyberspace. It's moving from the finance space to the digital economy, the analog to the digital. What we're saying is sometimes the most lucrative thing you can do is do nothing. That is to say, I'll give you an example. You have $1 billion, you're in Africa, and I tell you, you can go and invest in anything in Africa. You got to hold it for 30 years. I'll give you 1,000 guys to analyze everything. Or you can buy $1 billion of Bitcoin. And you're like, well, the $1 billion of Bitcoin is doing nothing. I'm like, yeah. You're keeping the $1 billion forever, and you're doing nothing. The $1 billion invested in Africa is I'm taking Egyptian risk. I'm taking Zambia, Central Africa risk. I'm taking Nigeria risk. I'm taking risk on that ranch. So most of the time, people have to take risks, and then they got to worry about it. Bitcoin is risk stripped away from the capital, and inflation stripped away from the capital. So when I evaluate any investment, my view is, okay, well, is it going to give me a risk-free 29% ARR? By the way, coming back to that, it's like 60% ARR collapsing down to like 20% over 21 years, and the average works out to 29%. And the assumption is the dollar supply keeps growing at 7, 8, 9%, and then you get an additional gain because we invent robots and AI and flying cars, and so the actual S&P index is growing because the U.S. prints more dollars, but it's also growing because we invent obscenely cool, useful things like the iPhone or like an electric car. So the future is good, but at the end of the day, Bitcoin's future is just pure digital capital. And I look at it as, why don't I just keep buying something going up 29%? All I got to do is borrow the money or raise the money at a cost of capital less than 29% over 21 years. And And it makes sense for us because we're a pure play, right? People want us to do that. I mean, the people that are short, they want us to be pure play.
That's why Saylor's strategy might be the play of the decade. With MicroStrategy doubling down on Bitcoin, it's evident that buying and holding is a solid approach as Bitcoin aims for a monumental future. Despite the critics, the results speak for themselves. MicroStrategy's Bitcoin holdings are soaring, and they're not slowing down anytime soon. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.